Most people still think of silver as a shiny metal used in jewelry, old coins, or perhaps an investment alternative to gold. But what if I told you that one of the most important battles of the next decade may revolve around silver? Not because of speculation, not because of social media trends, but because modern civilization increasingly depends on it. Here's what's really happening behind the headlines. At the exact moment, the world is attempting its largest energy transition in history, while artificial intelligence expands at a staggering pace, while governments increase defense spending, and while debt levels reach unprecedented territory, one tiny metal sits at the center of all these trends: silver. Few people understand the chain reaction that could unfold. Most investors are looking in the wrong place. The headlines are dominated by stock markets, central bank decisions, geopolitical conflicts, and inflation reports. Yet beneath all of those stories lies a quieter but potentially far more significant development. The silver market is undergoing a structural transformation. This isn't about predicting a price target. It's about understanding a changing world. Because silver is no longer simply a precious metal, it's becoming a strategic resource, and that changes everything. Over the next few minutes, we're going to explore 6 critical insights. First, what's really happening behind this silver endgame. Second, the hidden supply problems nobody is discussing. Third, why demand is changing faster than many analysts expected. Fourth, what history can teach us. Fifth, why governments, institutions, and smart money are paying attention. And finally, what all of this could mean for ordinary people trying to protect their purchasing power in an increasingly uncertain world. Because sometimes the biggest shifts happen quietly, until suddenly they aren't quiet anymore. Let's begin. The silver endgame is not a single event. It's the convergence of multiple forces arriving at the same time. Here's what most people don't realize. Think of the global economy like a machine. Every gear depends on another gear. Artificial intelligence needs data centers. Data centers need electricity. Electricity needs transmission infrastructure. Transmission infrastructure needs silver. Solar panels need silver. Electric vehicles need silver. Advanced weapons systems need silver. Consumer electronics need silver. National security increasingly depends on silver. The world is becoming more dependent on this metal at the exact moment supply is becoming more difficult to expand. Mainstream media often treats these stories separately: an AI story here, an energy story there, a defense spending story somewhere else. But they're all connected. That's the bigger picture. Industry reports continue to point toward persistent silver market deficits, meaning annual demand is exceeding newly mined supply. Some estimates suggest the market has now experienced multiple consecutive years of deficits, while inventories have gradually been drawn down, and that should get our attention. Because unlike paper currencies, you can't simply print more silver. If you're interested in understanding the forces shaping precious metals and the global economy, consider subscribing. I post videos like this regularly. Now let's talk about supply. Imagine trying to fill a swimming pool while someone keeps turning off the hose. That's essentially what's happening. Silver production is facing structural challenges. Ore grades are declining, energy costs remain elevated, permitting timelines have become longer, political risks are increasing. And here's an important detail many people overlook. Roughly 3/4 of silver production comes as a byproduct of mining other metals like copper, zinc, and lead. That means silver miners cannot simply decide to double production because silver prices rise. It doesn't work that way. The world's major producing regions include Mexico, Peru, China, Russia, Australia, and Chile. Each of these countries faces its own challenges: political uncertainty, environmental regulations, resource nationalism, labor disruptions, infrastructure constraints. Mining is also a long-term business. A new project can take a decade or longer from discovery to production. You cannot solve a shortage overnight, and energy matters tremendously. Mining is an energy-intensive industry. When diesel prices rise, operating costs rise. When electricity becomes more expensive, margins shrink. When capital becomes expensive because interest rates are higher, fewer projects get financed. The result? Supply growth struggles to keep pace. This is why structural deficits matter. They're not necessarily dramatic in any single year, but over time, Small shortages compound, like removing a few bricks from a wall every day. Eventually, the wall weakens. Now let's examine demand, because this is where the story becomes fascinating. Silver is unique. Gold is primarily a monetary metal. Copper is primarily an industrial metal. Silver sits in the middle. It is both. Its conductivity is extraordinary. Its thermal properties are exceptional. Its antimicrobial properties make it useful in specialized applications. The world is finding new ways to use silver every year. Solar energy remains one of the largest consumers. Electric vehicles use significantly more silver than traditional vehicles. Artificial intelligence requires data centers, semiconductors, networking equipment, and massive electrical infrastructure. Defense systems increasingly rely on advanced electronics, and modern society itself is becoming more electrified. Even though manufacturers are improving efficiency and reducing silver use per solar panel, industrial demand remains extremely robust because overall deployment continues expanding. Analysts still expect supply deficits to persist. This is the difference between efficiency and replacement. Using less silver per device doesn't mean silver demand disappears. It means the world must innovate simply to keep up. And that's why silver has become strategically important. If this analysis is helping you connect the dots, subscribe and join our growing community here at Precious Metals Alert. Now let's zoom out, because history offers important lessons. History rarely repeats perfectly, but it often rhymes. In the 1970s, inflation reshaped investor behavior. During the 2008 financial crisis, trust in financial institutions collapsed. During COVID, global supply chains fractured. We discovered that modern economies are far more fragile than many assumed. A single disruption in one region can create shortages around the world. Energy shocks amplify everything. Transportation costs rise. Manufacturing costs rise. Consumer prices rise. Confidence falls. Silver has repeatedly demonstrated sensitivity during these periods, not because silver is magical, but because uncertainty changes behavior. People begin asking different questions. What is real? What has intrinsic value? What assets are difficult to create? What assets are essential to economic activity? The silver squeeze discussions of recent years also revealed another important reality. The physical market and paper markets are not identical. Physical availability matters. Industrial consumers cannot substitute a digital contract for a physical component needed in a factory. That's why supply chains matter so much. History teaches us something else. Major transitions are rarely linear. They are volatile. There are setbacks, false starts, periods of euphoria, periods of pessimism. But long-term trends tend to persist, and the electrification trend appears very real. Now let's discuss why smart money is paying attention. This isn't solely about silver. It's about the broader monetary system. Global debt levels remain extraordinarily high. Government deficits continue expanding. Questions surrounding currency stability are becoming more common. Central banks themselves are sending a signal. The World Gold Council reports that central bank gold purchases have remained historically elevated, with hundreds of tons added annually and many institutions indicating plans to continue increasing reserves as part of long-term diversification strategies. Why does that matter? Because central banks are effectively saying they want assets outside the traditional fiat system. BRICS nations are discussing alternative payment systems. Countries are diversifying reserves. Geopolitical fragmentation is accelerating. Family offices and institutional investors are increasingly paying attention to hard assets, not because they expect collapse, but because they understand resilience. Diversification is a form of insurance, and insurance is often purchased before it's needed. That's an important distinction. If you're finding value in these deeper macro insights, consider subscribing because we cover the stories mainstream media often overlooks. So what does all this mean for ordinary people? Quite a lot. Because this is not just an investor story, it's a purchasing power story. Inflation affects everyone. Higher energy costs affect everyone. Supply chain disruptions affect everyone. Retirement planning affects everyone. No one can predict the future with certainty. No one knows exactly where silver prices will go next year. Anyone claiming certainty should be approached cautiously. But understanding the forces at work allows people to prepare rather than react. And preparation is very different from prediction. There are several timeless principles worth remembering. Diversification matters. Long-term thinking matters. Risk management matters. Patience matters. Education matters. Avoid emotional decisions. Avoid chasing headlines. Focus on understanding systems instead. Because once you understand systems, individual events become easier to interpret. Silver is not a guaranteed investment, nothing is, but it may represent something larger, a reflection of structural change, a mirror of the energy transition, a barometer of industrial expansion, a signal of monetary uncertainty, and perhaps most importantly, a reminder that real-world resources still matter. As we wrap up, remember this: the silver endgame is not about panic. It's not about fear. It's not about predicting an overnight explosion. It's about recognizing a historic convergence. Supply constraints, industrial transformation, artificial intelligence, electrification, geopolitical fragmentation, debt accumulation, monetary uncertainty. Each force individually is significant. Together, they become impossible to ignore. Markets move in cycles. Headlines come and go. But the laws of supply and demand never disappear. Eventually, reality catches up, and reality is telling us something important. Modern civilization is becoming more dependent on strategic materials. At the same time, obtaining those materials is becoming more difficult. That tension is worth paying attention to. The biggest opportunities often emerge long before the crowd notices, and sometimes by the time everyone notices, much of the move has already happened. So pay attention to the trends most people ignore. Look beneath the headlines. Connect the dots. Study the systems that power the world around you. Because informed people are less likely to panic and more likely to prepare. And preparation has always been one of the greatest forms of wealth preservation. If you found this analysis valuable, please like the video, subscribe to Precious Metals Alert, and share it with someone who wants to understand the changing world around us. Until next time, stay informed, stay prepared, and keep your eyes on the metals.